Christmas Musings with Fairbairn and Russell. Hello and welcome to the Market Musings podcast, where today we welcome private investor Iaroslav, who we had on a few months ago, actually. And Iaroslav was talking to us about his research under his company name Gulag. Capital Partners really do like that name indeed, and so we're very happy to have you back on the podcast, Iaroslav. I think the research that you do is fantastic. It's rare that we find someone like that, and I think a lot of people are quite keen to hear this podcast and to have a catch up. So welcome very much to you. How are you doing?
Thank you, Mark. Thank you, Kenny. Very honored to be invited back by you guys. Pleasure to catch up, and thank you very much for the warm welcome.
Absolutely, yes. It's maybe not so warm in terms of climate, but we should hopefully all be feeling warmer due to the festive period, even though it's going to be quite different for a lot of people. And the person who really does feel warm around this time of year is, of course, Kenny. How are you doing?
Yeah, doing well. Good to have you back on again, Iaroslav. And, I think last time, obviously I was in Scotland. Mark, you might have been in Holland at that point, and Iaroslav, you were in Dubai, but now we're all back in the UK. I believe you're over in the UK almost permanently at the moment, Iaroslav?
I am. I've moved in the beginning of October. And so I've been here for almost 3 months. I've decided to take an academic leave at work to do a master's in computer science at Imperial. So I'll be studying for the next year, and then we'll see how things go.
Right. And how's that panning out? Is it difficult?
It is a very intense course. It is. I'm actually studying more than I used to work in my full-time job, which was quite a lot already. I'm somewhat taken aback by the intensity, but it's really enjoyable at the same time as well. Like most of the classes are online, but it works well given the subject. The more in-person subjects at the school are all in person. So for computer science, the mixed learning works really well.
Yeah,
I'm really enjoying the material as well.
Good stuff. And is your employer keeping your job posting open for you, or did you physically leave that company?
So I'm on academic leave. I can come back.
Good.
So I was working kind of part-time remotely until a few days ago, actually. Mm-hmm. So still in touch with everyone. I might decide to come back.
What led to that decision then, Iaroslav?
So in my spare time, I've been running this Twitter account and doing investments in the metals market. Mm-hmm. Along with that, I also run a more event-driven strategy based on things like earnings, just fundamental macro drivers, very much along the same lines as what I do with metals, just more for generic for the entire market. And I developed some software to essentially test the impact, to quantify the impact of a particular event on a particular asset. And I developed a prototype that I've been using for some time. It works to the extent where of a prototype built part-time during work. So it has some functionality, but at the same time, it's not quite where I'd like it to be. And I realized at a certain point that to get this homebrew software to a more institutional standard, to really scale my investment activity, I'd need to learn to code properly and design the tech product. And I felt doing a master's in computer science would be the best way to get.
Okay.
And so far, it's looking good. I'm going to be doing some group projects. Maybe working on some cryptocurrency stuff, so kind of finance related. So I'm getting, so far in the 3 months, I've been learning the exact right kind of skills to take this further, and I'm hoping to advance the software project as part of my dissertation later in the year.
Okay. And what is the idea behind your software? Can you say, or not at the moment?
Yeah, absolutely. So essentially, the idea is that you type in an event and it quantifies whether that event affects a given security in a particular way, in ideally a tradable way. So idea is to be able to test any event that's reasonably recurring on any asset. So for example, something like if I enter something like, say, earnings, how does a particular stock behave after earnings? It might find something that, say, for example, something like Twitter, more often than not, like on more than 50% of the occasions, it tends to drop after earnings. Or if I want to test a hypothesis that, for example, precious metals have a strong seasonality, I can quantify that seasonality with a formula, and then it will run some statistical tests to determine if you trade the seasonality, what's the profit you can generate, what's the drawdown, and a bunch of other risk metrics to tell if this is a potentially reliable trading signal. So essentially, it's a tool to quantify cause and effect relationships for fundamental investment decisions. So anything ranging from does the stock perform after earnings? Does lower interest rates lead to S&P going higher, or seasonality? And I've got a range of events I can test now. I'd like to scale that to be able to test any kind of fundamental driver in the future.
Okay, that sounds very interesting.
Yeah, and obviously things like COVID is obviously an event that we need to factor into a piece of software like this.
Part of the idea is normally these things can be computed manually. So like, for example, during COVID, one of the tests I was running is after a sharp sell-off, how fast will the market recover? So this was one of the interesting takeaways during the summer. There was some basically looking at historical crashes. There was a way to predict some of the recovery that's been taking place over the summer. Interestingly, during this year, some of the things that came up in this whole event-driven analysis was some of the gold and silver trends. I find these event-driven analysis tends to work best on rare and unusual events. So, for example, like extreme rallies. There was a point during the summer when silver increased about 15%, 20% within 3 days. And that's something that happens every once in a few years. It's the kind of thing that happens like a couple of times in a decade. And the takeaway, interestingly, was that for a short period of time after that, it tends to keep increasing, which is what we saw around late July, August. It tends to drop off for a good few months after that, which is exactly what we've been seeing since late summer.
Right. So it's basically like an algorithm almost for, instead of for Forex, it's almost like an algorithm for commodities trading. That's the kind of best way to describe it.
I'd say it's more like a conditional probability tool. Like, what happens to asset Y after event X? I'm just trying to compute conditional distributions.
All right. Okay, perfect. Well, even though you're up to your eyeballs in your university degree and obviously this software in the background, you've still found the time to produce research. Obviously, you had your Eurasia mining one which came out, I think, at the beginning of the year, and you've since produced one for power metal resources, and now you've come out with we'll call it's a research note, I suppose. It's the best way to describe it, and it's titled "To Buy or Not to Buy the Dip." So where did the idea for this come around, Iaroslav?
So school just finished for me on the 18th, and I thought it'd be a good time to. There's a whole combination of factors. I had a bit of time, and I felt it was a really interesting time in the market now as well.
Yep.
Because we've been in kind of a lull in the mining sector activity since around August. Started selling off. It's kind of been range bound, choppy, and a lot of names kind of just news flows not been very intense. A lot of names have sold off quite a lot, and but it's dragged on for some time. The fundamentals for the precious metal space are fully intact. These corrections are needed. They're necessary for a prolonged, healthy uptrend. And we're entering now a very interesting time in the year. That's the first quarter, the end of fourth, beginning of the first quarter, which tends to act as a very strong uptrend for the metals on average. I believe the fundamental explanation is what we're seeing now in the US with the stimulus talks. I believe that is the broad reason for why metals tend to move in the beginning of the year, followed by more or less flat to down Q3 and beginning of Q4. Government budgets tend to be set around this time. There's all sorts of stimulus talks around the globe. EU has just passed a big stimulus package. We're likely going to see more stimulus passed after the US inauguration. So there'll be a number of catalysts in kind of the next few weeks in fairly foreseeable future. And the metals have already bounced off the lows about 2 weeks ago. And we've seen some attempts to break out. They've not fully succeeded so far, but the attempts have certainly been intriguing. Silver intraday volatility has been up to 10% within a span of under 48 hours.
Yeah, it's been quite violent. Now, there was one day this week. It was I got out of my bed and it was like 5.5% up. And within a few hours, it was like 1.5% down. It's seen some extremes this week.
Hopefully, it translates into a couple more 5% up days come New Year. More of a sustained uptrend to break out of this range.
Yeah, and so I mean, it's this note's all it's all based on gold, silver, copper, nickel, PGMs. When you say metals market, we're talking about those metals basically.
Platinum has been performing interestingly as well. It's broken out quite a bit. It's part of the driver, I believe, is an increased focus on hydrogen technology. Some of the South African supply that's been a bit weak as well.
Mm-hmm.
And it looks like Japan, for example, has kicked off a new hydrogen program that's very bullish for platinum. And PGMs on average have held up very well despite COVID. I remember during the start of COVID, there was a Bloomberg article which discussed that people might actually be switching more to personal cars with the COVID to avoid public transport. And interestingly, I've actually seen it with some people I know. Some people have been actually getting new cars to just avoid the risk of getting infected. So I think the switch to a more personal transportation, that'll continue being a driver. A lot of the government programs, I believe PGMs will continue to do well. I think we might not see the 3,000 kind of levels in palladium, maybe in the very short term, but the fundamental demand and supply constraints are still very much there.
Yeah, definitely. And so you took this theme of metals markets, and you applied it to some companies in the AIM stock market. Can you maybe give us an overview of how you picked some of these companies? What was the criteria for doing this?
Mm-hmm. The AIM market for natural resources companies, I focused here only on the metals, not just strictly sticking to precious. I found a few interesting opportunities in the base metals as well, and some in rare earths, which in their investment thesis I felt were similar to the general precious metals market. So I felt they were fairly noteworthy. So I decided to include those as well. And so I started with the entire AIM universe, which is about 80 names, 70, 80 names, if including everything, and there's about 65 which are above $5 million in market cap. Mm-hmm. And I narrowed it down. So our ideal targets should this two main investment criteria. One is the fundamental quality of the asset. So that's defined by quality of the assets, the management, jurisdiction, and valuation. And the second pillar is the current or expected news flow. That is quite important as well, because in the small cap space, names are driven partially by their fundamentals, and because news flow is fairly one-off and chunky, there can be events which move stock valuations just in a single news release by itself by the order of 50% to 100%.
Yep. And I'm looking at page 5 on this the PDF, and obviously when we put out the podcast, we'll put up a link to the PDF. Now I noticed in pages 5 and 6 you've got these numbered. Is there any particular reason for this, or is this just you know? I mean, is this your top picks? Is number 1 Eurasia Mining, the top pick? Number 2 is POW. Number 3 is ECR, or is it just a numbering system, or is there some relevance to the order the stocks are displayed?
They're not in strict kind of preference order. They're more by category, and within a category, it's more or less in no particular order. When I did the initial universe, I ranked names by their performance versus the 52-week low. So going to pages 8 and 9, the way I ordered them was by performance of the 52-week low. And I felt this was quite an interesting way to screen names, because that performance number tells the amount of traction the stock has been getting in the post-COVID world. And those names which have performed, ideally, we want to see names which are already getting some traction. It's much easier to follow a trend once it emerges than potentially own a name for some time before there's any real news flow, fundamental developments to move it. So that order kind of defined the ranking on pages 5 and 6. But essentially, it's in no particular order, really. There's obviously the two picks from earlier, Eurasia and Power Metal. Eurasia is a slightly different game now versus when I first started looking at it. The stock has already kind of advanced to index inclusion stage. It's no longer a small cap. So it's less of a valuation game. It's more of a bet on that M&A process that's ongoing now. So it's a slightly different thesis from most of the names on the list. but it's obviously done very well. And looking at the recent performance, there's potentially still some nice upside, which may actually be evened out by the size. The core focus of the list is to find names which are strong fundamental picks, but are in the earlier stage, so which have the potential to deliver hopefully 2, 3, 5x, which is the idea I had in designing the list. So to balance the valuation bucket and the fundamental criteria. The second up, I've got Power Metal, which I own, and along with Eurasia, and which has been getting some interesting traction on both the nickel projects and potentially the Victoria as well, with the license applications and the potentially being fairly imminent.
So obviously there's two focus list pages, Iaroslav. Is there any sort of standout picks on these two pages that you think would five-baggle in 2021? Is there anything that jumps out at you?
There's a few. So within the dark green bucket, I also added ECR, which is a neighbor of Power Metal, which has been getting some very interesting traction. And looking at how the TSX listed peers are valued, if either Power Metal or ECR start to re-rate towards more the Fosterville South kind of valuations, they both could be looking at like 3, 4x fairly easily. AsiaMet and Horizonte. So AsiaMet is just attractively valued, has been doing some nice share price dynamic. It's a polymetallic deposit. It's got a mix of all the metals that have been doing really well, and at $100 million market cap, it's fairly interestingly valued as well, and it's got some existing momentum.
Mm-hmm. Mm-hmm. So just looking at page 8 and 9. So that's a very long list. You've got 64 companies there. That's obviously, that list is not exhaustive. It's not that's not every single mining or exploration stock on the LSE, is it?
It's so it's just the AIM, so not really the LSE. It's the AIM that's above $5 million market cap, and it's the primary listings only. So it doesn't include the stuff that's main listing is in like TSX or Johannesburg, and it's got a secondary listing.
Right. So it's exploration stocks mainly on AIM that have a market cap above 5 million.
Yeah, it excludes the really small caps, and it's just metals. There's a couple of.
Okay.
It's basically a list taken from Capital IQ.
Okay, and out of those 64, then your focus list part 1, 13 and 13, so 26. So out of the 64, those are your 26. If you might say top picks.
Yes.
Yeah. Okay. Yeah, I see a lot of familiar names on your list there. I mean, Eurasia has done very well. Power Metal Resources probably will do very well next year. ECR again. AsiaMet. I mean, yeah, it's been around. Horizonte, I haven't heard of. Neither have I heard of Silviana. Trident. I think is that Fred Bell's company. Is that the royalty? No, it's not. Is it? No, it's the first royalty company in Britain, isn't it? It's listed in Britain, I think.
Yeah. Fred Bell's was Elemental royalties.
Elemental,
Mark.
Yeah. No, Trident's the first London, isn't it? London listed royalty company, which could certainly be interesting.
We've even got one of my favourites down there, Red Rock Resources.
Yeah, I see that.
Yeah, that's one of my picks for 2021. I just think it's so undervalued against some of its peers, especially with the strong asset portfolio that it's got. But obviously, there's the Andrew Bell factor in there. Some people love him, some people hate him. So it's it's one of those stocks, but eventually the assets will shine through. That's my opinion.
Yeah,
that's
and Red
why
Rock. Yeah, they will. I see Conroy Gold's also there as well. Iaroslav, what do you like about that one?
It's a mix of geology and valuation. It's got a very interesting asset in Ireland, some very interesting exploration potential, a good team, and it's just $14 million. If there were to get some good traction with the project on some exploration activity, this could probably double. There's a couple of categories of picks I came up with here. There's early stage explorers, like the sub 20 million market cap. I've got a couple more in this bucket, like Anglesey, Lexington, Europa Metals. These are kind of at the stage of the sub 20 million where the valuation is not very demanding. And they've all got some possible catalysts that if they do hit them, these could jump into the bucket above. So to go from the sub 20 to potentially the 2030 or possibly the 2040 bucket.
Yeah, okay. And just maybe get some explanation on the PDF. So you've got obviously the name of the company, overview of what they're doing, where they are in the world, market cap, the debt to cash, you've got revenue capex, that's fine. So the share price, 52-week low, is that, so what's that? That is where the share price has moved from the 52-week low, is that right?
Exactly. So for example, for Power Metal, it's up almost 13x since the 52-week low.
What was that 52-week? Oh, yeah, because it dropped right down, didn't it, to like 0.25 Power Metals. Yeah. Is it up 13 times since then, is it? Wow, I didn't know it was gone that far.
It was at 20 pence at some point in April.
Yes, yeah. Wow. I knew it had risen a lot, and I am a shareholder in Power Metal Resources from about 0.5, I think, or around that area. So, I wasn't aware it had risen that much since the low. So then you've got share price versus, 52-week high. Okay, so again, Power Metal is up on its 52-week high, and the last 3 months. So in the last 3 months, Power Metals is up 17. Is that right? Exactly.
Yeah. So it was around 2 pence in early October, late September, early October. So yeah, it's increased about 7% since.
Okay.
Yeah, there's a few companies on there I've never heard of either. That Lexington Gold, I've never heard of that one.
No.
That's something.
What about Jangada? I've never heard of Jangada Mines in Brazil.
Yeah, I've heard of them. I've never really looked into it, to be honest. But
this is a great list, though, isn't it? I mean, this is fantastic. If you want to invest in mining in that space, this is a great starting point.
Yeah, it certainly gives you a lot of facts and figures in the one place, and you can have a look because you get obviously the commodity they're looking for, the geography, where it's based, what stage they're at, and then obviously Iaroslav is he's sort of graded them. So
yeah.
I take it the plans is, Iaroslav, are you going to expand in this? Are you going to maybe look at companies listed in the main market, or are you just keeping it to AIM at the moment?
I think I'll stick to the AIM for now. I think the best opportunity in the space is the dream is to catch a Greatland or a Eurasia early on, or a Power, but at 20.2p, and to ride it for 10x plus. And I feel this segment of the market is where the best opportunity for that is. And one of the main reasons why I track this versus 52-week low metric closely is the thesis is with these small cap metals names, it's kind of like you get VC returns, but you have a lot of predictability on the revenue and the unit pricing. The demand for the product is always there. It's just about validating the execution part of the investment case.
Mm-hmm.
there's a couple of, especially on the AIM, there's out of about less than 100 relatively sizable mining stocks in the AIM. There's a few that spring to mind immediately with like over 100 bags worth of returns. So it's Eurasia, Greatland, and so that's 1 out of 40, 50 names, which is very impressive. Catching just 1 out of the 50 can be game changing. And my thesis is that every, say, 50 bagger or 100 bagger, somewhere along the way, it's a 10x of 52-week low. Most likely, it will. If there are going to be a company which does a 50x, it's fairly highly likely it'll show up on the share price versus 52-week low being up several 100%. So that's one of the reasons I rank them by that metric and focus on that quite strongly, because it is likely that one of those names in those like several 100% of the 52-week low will be able to do a similar jump from here onwards. It's already showed some momentum, and I believe the best opportunities are where it's already done that 10x kind of 5x jump, but the valuation is still at a level where it could go substantially further. The way I look at those names is after spending some time on the sector, the view I've come to on like how to look at valuations, it's slightly different from the traditional markets of doing DCF or NAV or cash flows. They seem to be more like by bucket. So like, and the buckets are kind of event driven and traction driven. So there's the broad category of names which are like really small caps, the sub 20s, the sub 10s, and those valuations are really not demanding at all. So for example, in that bucket here we have Red Rock, as you mentioned, Kenny, with the valuation being highly compelling at just 9 million is really not very demanding. And comparing that on the AIM to the TSX, for example, I think AIM has some very interesting opportunities on the valuation front. Like on the TSX, I've seen names which are hyped up but have kind of a similar level of traction, what could be valued 2-3x more than someone like Red Rock. So for 9 million, that's really quite a lot of value in terms of traction and the assets to just $9 million worth of value.
So how can people use this PDF then, Iaroslav, to perhaps pick the next winners? I mean, it's really good to see all that information there. And I do note at the bottom of each page, you say very clearly no investment advice, and of course we should always reiterate that it's your own research and your own investment decisions. But so there's no share price predictions here, or perhaps top picks. But how do you use this data to decide your investments that then could maybe help someone reading this to do the same?
There's a couple of broad themes in the list. So one is the undervalued early stage explorers, that if something moves, they could jump quite a lot. Then there is the undervalued producers or on the cusp of production. So that's more like the Sylvania, for example, is a producing asset. Horizonte is being fast-tracked to production. It's fully financed. Another one that's on the way to production is Rainbow Rare Earths. Jubilee is producing as well. And those were selected by balancing that the asset's already there, it's operating, but the valuation that it's trading at is fairly attractive. Like, for example, my favorite between the producers is probably Sylvania. It's spitting out a lot of cash at these levels of PGM prices. It's got one of the highest rhodium percentage mixes in their revenue. They're reprocessing chrome and PGM rich tailings essentially. And the company doesn't spend a lot of time on marketing itself. which is another big theme with a lot of these names. A lot of the companies are very solid operationally, but haven't gone out there to pump their share price to engage with investors to attract the maximum visibility possible. So that's another theme, like assets operating safely and with good margins, good cash flows, but valuation not necessarily reflecting that to the full. There's a few more kind of one-off plays, and ultimately, I think selecting some stocks from to portfolio depends on the preference. Someone might prefer picks which are producing cash flowing. That's one type of risk tolerance. Another way to play it might be to focus more on the explorers, which have potential to re-rate after some results, exploration campaigns. And there's the more one-off kind of investment case situation. So that's, for example, Jangada. Jangada is a base metals project. It's got some PGM interest as well. But it's a bit like Red Rock in a way. It's got an interesting fundamental case. It just needs a catalyst to move. There's a couple more picks there, which are along the lines of Trident. So more specialized, like a slightly different business model with the royalties. Metal Tiger, that being like essentially an investment company. And there's a couple of more special thesis. So something like Rambler Metals, that's a turnaround game, which with the copper prices, copper performing as it has, might be an interesting angle. Trans-Siberian, that's another one of special cases as well. It's been remarkable that it managed to increase their resource base. But it's one that normally would not be the super target profile. But there's definitely something there with the way they've been moving.
Okay.
So
I take it with you're doing your degree in computing science, Iaroslav. I take it the idea would be potentially to take this PDF into some sort of database where it'd be much easier for you to manage and to maybe write new conditions, etc., so that it constantly updates. So you ever considered something like that?
Yeah, absolutely. I actually have a sheet linked to Capital IQ that I screen stuff with. I've built basically a VBA tracker that allows to say stuff like I have the full universe of names globally loaded up. I can select them on a bunch of screens I have. So it's fairly easy to select something like all silver names or PGM names listed on the AIM. And that's essentially how I produce the lists.
All right, okay. Well, it's a work in progress. So I'm going to put you in the spot. So you've got your focus lists on pages 5 and 6. Give us 2 stocks, or give us 3 stocks for 2021 that you think will 5 bag or more.
Yeah, I was going to ask the same question. Yeah, as we're approaching the end of 2020, it's probably our last podcast of the year. Maybe we could ask Iaroslav if he could give some top picks for 2021. What do you think, Iaroslav?
I'd definitely put Power Metal on that list. There's the exploration campaigns which are happening across all the assets. There's the potential TSX spinoff of the Victoria Gold, which could lift the valuation substantially. Overall, it's a package of assets which for a comparable asset tends to command a much higher premium. And it's in the process of re-rating to that. So I see Power Metal having the potential to reach $100 million market cap and possibly more with depending on how the exploration goes. Also the management with Paul Johnson's leadership, that's very strong as well. and he's been involved with some of the highest, best success stories on the exchange. So I'd probably put Power Metal as the top pick. It's also sized appropriately in my own portfolio, so I'm in a way biased, but I put my money to that as well. And second, I probably put Trident. Trident, I've not spent as much time on it yet. I've actually gotten in touch with the management a couple of days ago to ask a few questions about their development strategy, and I'm very impressed with what I see. The whole royalty model is interesting because it tends to command outsized valuations for any single dollar of cash flow. It's like you do 1 unit of work, and instead of being paid $2 for it, like if you're a large cap miner, you just get paid 10 because it's seen as a highly recurring low risk cash flow. So looking at market caps of some of the royalty companies out there, there's companies with limited revenue with market caps close to $1 billion, and some of the highest, like over 100x bags names, they've come from the royalty space. So there's been like Metalla Royalty has been very successful, Franco-Nevada, Wheaton Precious Metals. Some of the largest like return multiples are in that segment of the market. So Trident being like a recent entrant and at a very attractive valuation is very noteworthy. They have a strong pipeline to deploy capital. Essentially, a royalty business is like a bank or a private equity firm. It's a deployer of capital to where others don't really want to finance mining. And they've got a good deal funnel. Looking at the last 3-4 months, they've closed quite a lot of deals. They've well capitalized, and at $44 million market cap, it's very compelling. I think it could cross 100 on a few big news flow items. I'm still studying it, but I'll probably be taking a position in foreseeable future. Just looking at like some of the TSX listed names, with some with less traction, less revenue, are trading at well over 100 million market cap. So I think this will converge.
Okay, and number 3.
Number 3, it's an interesting one. I would probably put AsiaMet.
Okay.
To balance out the early stage, I think it would be good to have an asset close to production, like an advanced stage exploration asset. It's got a lot of exploration activity, moving nicely. So I think it could reach a 200 plus market cap with some more preparation towards production. I'd say Sylvania is probably quite close. Another fairly safe pick to own is just producing incredible levels of free cash flow at this valuation.
Yeah, I remember you've told me about that one before, Iaroslav. What was the free cash flow a year? Was it $100 million from memory or something like that? It was.
Yeah, it's making about 70 million of EBITDA at these. The last time I looked at the numbers, it was making over 70 million EBITDA and about 50 of cash flow. And I think the run rate has increased since then because the metals have just stayed at this plateau of high prices for some time. So it's probably closer to 70, 100 range on the cash flow. It's a company that essentially will build at least a quarter of its market cap per year in cash.
Yeah, and it's just simply a tailings processor. That's their main project.
That's pretty much it. They're sitting next to some very just very attractive tailings assets. It's got the lowest cost in PGM production globally, I believe.
All right.
Their oldest cost is something like $600.
Yeah, that's certainly it's an interesting document. I'll need to have a good read at it. I mean, there's a couple on there that, like I said earlier on, that I've not came across before. So it's definitely a good place to start in doing some research. So what's the next thing in the Gulag Capital project pipeline? What's the next project?
I've got a few ideas. I'm thinking to do a note focused on silver.
Oh, Kenny will like that.
Oh yeah, I'd love that. Yeah, I like my silver.
I'm thinking, I've actually started putting something together last night. I've been looking at how silver seems to be breaking ahead of the gold. And I figured why not dig into the sector a little bit deeper and create a focus list in a similar manner of names which warrant a deep dive. Essentially, kind of going back to this list, the way I look at it, there's the whole universe. Then I like to narrow it down, and then from a manageable list to pick a few gradually with a deep dive research on each one. Next one, yeah.
Yeah, obviously silver's pretty much dominated by the TSX at the moment, with a few exceptions on AIM, but it seems to be TSX companies that seem to be leading the way in silver exploration and production, to best of my knowledge.
Yeah, it does seem to be quite TSX focused. I'm not sure about the ASX, if there's anything there. I've not gotten around to looking at that exchange so much.
Yeah, oh well, we'll look forward to that then. I'd certainly be interested in a bit of silver analysis. Have you got any physical silver yourself, Iaroslav?
No, nothing on the physical metals at all. I used to when I was in high school. Actually, my first trade ever was a couple of silver coins with money I got from my parents, but I've sold it since.
Yeah, you need to get back into it. So you do. Yeah. No, there's definitely a lot of well, we call them silver stackers or stackers. There's a lot of people buying physical silver now. I think it's a good investment. It's a bit of diversification in your portfolio, something different, and it's quite nice to physically have. I mean, everybody loves Bitcoin, but you can't physically hold Bitcoin, whereas you can physically hold silver and gold, but as well, I suppose that falls into the same category. So, yeah. Anyway, good stuff. Well, it's been great to have you on, Iaroslav, and I think we should get you on probably more frequently, because I think it's probably 3 or 4 months since the last time you were on. So it'd be great to have you back on, and we can maybe Mark, you can take a mental note of Power Metal Resources, Asia Met, and Trident Royalties, and we'll maybe see how they go on in 2021.
Yeah, indeed. Definitely. Look, Iaroslav, it's been fantastic to have you on again. And as Kenny says, maybe once every quarter or something, it would be nice to catch up with you. But for now, wish you a very happy Christmas and a new year. And we'll catch up soon.
Thank you very much, gentlemen, for having me on. Very honored again to have been invited back. Real pleasure to chat. And hopefully we'll speak again.
Yeah. Just before you go, Iaroslav, Mark can actually speak Russian, so he can. I think it would be good if you could probably say some cheerio in Russian, just to give a bit of culture to a podcast. Go on, Mark.
I can't speak that much Russian, but I can say "paka" to you, Iaroslav.
That's very good.
It takes me a while to get back into it. We could start a conversation and stuff would come back to me, but no, unless I'm in the country, I know German as well, but unless I'm flying Lufthansa or in the country, it starts to come back to you. But off the cuff like that, yeah, I can say spasibo bolshoi, and yeah, paka.
S Novim Godem, Mark.
Yeah, s Novim Godem as well. Yeah, to you as well.
Yeah,
I'm exactly like that with German. Like I speak a bit, but it only comes back when I go to the country.
Exactly. Yeah, exactly. Yeah.
For the next podcast, Mark, you have to do the opening gambit in Russian. So you have.
Should that be a challenge for me then to do the opening gambit? Okay.
Definitely.
Right, might be a short one.
Yeah. All right, good stuff. Right, I'll let you guys go and have a good Christmas, Iaroslav, and we'll speak in the new year.
Thank you, Kenny. Merry Christmas to you again, and Happy New Year, and speak soon.
Okay, that's great. Thank you.
Thank you.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell.